All right, welcome everybody. This is my office hours. I am Danny Naz. You might know me as the Pup of Wall Street. It's April 13th, 7 p.m. Eastern Standard Time. I run these office hours every 2 weeks, back to my regular schedule now that my writing class is done. So expect every 2 Wednesdays, I run this class for my members. I also invite some people, if you're interested and you follow me on Twitter, you want to peek behind the curtain, see what I'm all about, how I trade. Basically, let me go over the agenda. So a little bit about myself. I've been trading in the markets for over 8 years. I've been trading full-time for 3 years now. Primarily, I'm a swing trader, but I do day trade, I do scalp. Just based on the way the market has been acting, swing trades definitely have been more difficult in the last few months than they have been in the last couple of years, but it's just the nature of the market. And, as we rise, we're going to have some turbulence as we hit new highs. So, so I've been trading in the markets, like I mentioned, for a few years, full time. And as a swing trader, my job is really to hunt for the relative strength in the market. That's what I do all day, every day. I don't generally play, for those of you who are new, don't know me, I don't generally do trades to the downside. I find it's much easier to look at the indexes to the downside than trying to pick individual names to take them short, whether you're using options or not. So regardless, there's always relative strength to the upside. Money cycles through different markets, and if you're savvy enough, you can through options activity, through dark pool activity, and just watching the different indices, you can kind of figure out where money is cycling to. And so that's what I do on a daily basis. I generally put out 1, maybe 2 trade ideas a day, depending on the nature of the market. This week has been a little light, and we'll go into why there hasn't been that many trade ideas this week once I get into the charts. So this is my office hours. We're going to run about 75 to 90 minutes. Generally tends to be on the 75-minute side. We're going to do about a 30-minute market overview. I'm going to go over the indices. I'm going to go over some of my picks for this week, and we'll look back at some of the previous trade ideas that I've put out in the last 4 to 6 weeks. And after that, we'll do some chart requests. So if you have any chart requests, feel free to drop them in the chat. We will definitely get to them. And after that, we'll do a little Q&A. You can, at that point, if you feel like coming on the mic and you want to unmute yourself, more than happy, or you can put your questions in chat. That's pretty much it. Talk a little bit about my software partners. I use TrendSpider as my primary charting platform, and I use Blackbox for dark pool and options flow. And then TradyTix is more of an AI generating software. It's pretty cool. It gives me a little more insight into some of the more AI driven trades from an algo standpoint. And I'll go over this before the end, but basically I do have my educational platform at $79 a quarter, $275 for the year. And then I also have the executive plan, which includes one-on-one coaching. And I see some of my coaching clients in here as well. So let's get into the chart. So bear with me 1 second while I get that screen shared. There we go. All right. So let's take a look at SPY. We've had this, this nice run up, in the last few weeks since FOMC. And, we had the FOMC right around here. We had this nice push. We broke the trend line. We back tested it here. We moved up. We consolidated into a pennant. Broke out of that, and we came right into this level that I was mentioning for a while. And you notice that we had 2 days there and 2 days there that we failed. So that was the level I was watching. And so, what's interesting with the market, it's very tricky, these market makers, right? So what happens? We have these 4 days of rejection. You get that 1 day breakout. Everybody gets all excited. I'm all in. we're going back to all-time highs. Yeah, psych. We're gonna fake you out. We're gonna push this market right back down. And that's what happened, right? And this is why you have to be really careful in today's environment with these all-time high breakouts, or not all-time high breakouts, but just breakouts in general. And so, what happened, we came back down, we back tested the 236 retracement, we pushed back up, we came right back up to that level. Look at that rejection right there. Same rejection here and here, here and here. And this candle here, bearish engulfing. It engulfs the prior candle, and that's generally a bearish reversal candle. And so, that's basically what we got, right? Came right back down to the 382, held it for 2 days. We tried to move higher. We were right on that 200 simple moving average. We were right on the swing low anchored VWAP right here. We already had that death cross, which is the 50 crossing under the 200, and that was right below. And that's kind of what we've been playing in for the last 3 days. So on Friday, we had that big sell-off right to 440. I was actually on Spaces while this was happening. I was like, watch for 440 to hold. And I said, the next day we'll probably gap down a little bit and we'll probably dip below. This will get all the short interest in, right? You have these levels right here. You have all these rejection levels right here. You get the shorts really excited right here. You fake them out to the downside. And what happens? We send it right back higher. And so this market is really, really tricky. You really have to be paying attention. And as swing traders, we need to also ignore the intraday volatility. And that's all we've been having. CPI data came out this week. It seems like the Fed comes out and says something stupid every single day. It's like they repeat themselves over and over and over again. We already know what's going to happen. We don't need you to say it every single day. But what that does is it causes volatility to rise, and it causes these intraday moves that are wild swings. And for swing traders, that's why I always say, wait for the daily close on these trade signals. You can take the intraday breakout, but you got to make sure that the candles close over that daily trigger. And we'll talk about some of those trade ideas in a minute. But yeah, I mean, nice bounce over 440 today. I think this was really positive. Something I've noticed looking at dark pool data, or not so much dark pool data, but options flow, there's a lot of put activity on SPY that's going to expire tomorrow. And just as a reminder, Good Friday on this Friday, market is closed. So tomorrow is literally Friday, even though it's Thursday. Tomorrow is the last day of the week. And so keep that in mind if you guys are options traders. Where did I draw the fibs? So the fibs are from, just grab my tool here. The fibs are from this low here to this high here. This is the 236 retracement, 382, 50%. You can see the 50% has been holding for 2 days right there. So keep in mind, we do have a short week, and with short week, options chains are going to, the options contracts are going to deteriorate faster. Theta is going to really eat into them much faster. So keep that in mind. So why I wanted to say about the options, the put options that are going to expire tomorrow for SPY, I think that was really interesting because it opens up for next week. Now, the other thing, and I think, Raina, I think you were the one that mentioned it last week, so big shout out to you, or 2 weeks ago, that April for SPY, the seasonality is really good. And so my thought process is, this week is pretty much a wash. It was, a lot of chop. But I think the last 2 weeks of April are going to be pretty good. So, I don't want to put the cart before the horse. I want to obviously, see some bullish action to the upside and a continuation off of today's low. But, it's looking pretty decent, at least, from a seasonality standpoint, as far as how the market is setting up right now. So we're holding those lows. Let's take a look at the Qs. So very similar story. We broke through this trend line. We had the death cross, very similar. We came up to the 618 retracement here at 371. That was from this swing high up here to this swing low right there. Get my spotlight tool on. There we go. So from that swing high up here to this swing low, we had a 618 retrace to the upside. That's exactly where I would expect some resistance. You also had the 200 simple moving average right here in red. You have to expect some resistance there. Again, look at the fake out. You break through that 200 simple moving average here. You put an inside day the next day, and you break to the downside. You come back, you try and retest that 200 simple moving average here for 2 days. You fail, you get a bearish engulfing candle right here, very similar to what we saw on SPY, and then they send it right down. And now we're taking the 618 retracement from this swing low to this swing high, the 618 retrace to the downside. Look at that bounce yesterday, right on top of the 618 retrace, and then today continuation to the top or to the upside. But we put an inside day here. So what we have to watch for, do we break through the high of yesterday? If we do, then we could possibly look for moves to the upside. That also will put us right above the 50 simple moving average, which is right here in blue. So that's what I'm going to be watching for on the indices for tomorrow. I'm not really sure how much trade I'm going to do tomorrow. We'll see if there are any setups first thing in the morning. I want to see, do we gap up? Do we gap down? What does it look like? I think it's going to be a volatile day, in my opinion. I'd much rather, save my mental capital for trading for next week. I think next week should, depending on what happens tomorrow, next week should present much better opportunities to trade, both from a day trading and a swing trading perspective. So let's take a quick look at IWM. This one's still trading in a bit of a range, really no momentum either way. We couldn't break down, we can't break up, and we're holding right underneath the 50 simple moving average right here. So, in order to see a broader market rally, you do need small caps to participate. And right now they're just, if I draw a consolidation box, I mean, this is the range that we're trading in. Until we get over this range, and really until we get over the 200 simple moving average in red here, I really don't see the market having a broader rally. It's going to be more about focusing on those sectors and those names, that are showing relative strength to the market. So now that we've kind of taken a look at the indices, let's take a look at my top 10 trades for the week. So we've had some really, really nice moves. Here's the first one. I'm going to do these in alphabetical order, so they're not really in any particular order other than alphabetically. And so the first one is going to be AMR. I had us for a trigger entry over 138. You can see we got that yesterday. Beautiful move right up to our first target at 145.78. Today, look at the back test right on that 138 breakout. Pushed higher after that back test. Beautiful move. This is exactly what I want to see. So you take the entry through the trigger, you're able to hold it the rest of the day. Since we already hit that first target, depending on what your trading style is, I would have probably taken a little bit of profit. Then you get that back test today in the morning, right off that 138 level, bounces right back higher. I feel really good about this trade. We're coming into our second target already at that 1618 extension. To the upside. Let me get that fixed real quick. So that's at 154. So we closed at around 149. But look at the setup, right? Beautiful ascending triangle, flat top, rising higher highs, rising higher lows. We also had some bullish hidden divergence. Basically what that means is RSI, or your favorite, lagging indicator, whether it be stochastics, MACD, if the indicator is making lower lows like we're seeing here, and price is making higher lows, it's showing weakening strength, but price moving higher. That's basically considered bullish hidden divergence. So it's one of the things that I really look for in terms of reversal plays. I'm always looking for divergence plays on RSI, on MACD, on stochastics. William percent R is another one. And then we also had a one-day squeeze set up right here. That's not really something I watch for. I want to see multi-day squeezes firing off, but nonetheless, it was a squeeze. It did fire off yesterday when we moved higher. Just to show you what the squeeze looks like, basically, it's the Keltner channels and the Bollinger Bands. Bollinger Bands are in blue. Keltner channels are in green. You see the Bollinger Bands, once they go inside the Keltner channels, that's in essence what the squeeze is. It's the Keltner channels squeezing the Bollinger Bands inside. And then as soon as it fires off, like we saw yesterday, you get an explosion in price. Now, you don't always see it. You don't always see it as big of a move, and it doesn't always fire off like in that first or second candle. But generally speaking, it will fire in the direction of the move. And so that's exactly what we're seeing here. One thing I like to do is I like to look at the lower time frames And I won't do it just for sake of time, but you can look on lower time frames, like a 30-minute, a 65-minute, a 2-hour chart, and look to see if there are lower time frame squeezes setting up. Generally, if they lower time frame squeezes fire, the upper time frame squeezes will cascade and fire as well. And so you usually will get a really nice move off of that. So we close that up, and that's basically AMR. So that one looking pretty good so far. Next one is CEIX. This is another one that had a daily entry over 41.43. We got that yesterday. Beautiful continuation through our first target. Now we're coming up to our second target of 50.51. So watch to see if we hit that tomorrow or maybe early next week. Again, look at the bullish hidden divergence right here. Signal the move that was potentially coming to the upside. That's exactly what we got. Next up is DK. I didn't put out a trade plan on this. It was just something that, I was watching, but I'm not too familiar with the name. So I wanted to just be careful putting out too many trade plans, but this one looked pretty good. I think I mentioned on the weekend review, if it holds the 618 this week, 22.10, then this is pretty good to take to the upside, targeting 24.43 and 27.40. It's exactly what it did. Monday, it actually dipped below and closed below the trigger, or closed below the fib. And then the next day, Tuesday, yesterday, it back tested, held, and then today we broke those previous highs. And so this one looks pretty decent to the upside. Next up is FNV. This is Franco-Nevada Corporation. I did not, again, put a trade alert out on this, but basically what I mentioned on the video was, we had a nice low here. We had a nice higher low here. And then we have this previous high back here in August of 2020. And it looks like we're coming into that level right here. We're closing above it today. So the last 2 days, Monday and Tuesday, false breakouts. And then today we got our true breakout. Look at the squeeze setting up. Falling momentum turns to rising momentum with the squeeze setting up in red. You get the squeeze fire yesterday. And like I said earlier, don't always get that move to the upside in that first squeeze firing, but we did get it on the second one. And so just keep a close eye on FNV for the rest of the week. Here is HD. So HD, I wasn't sure if it was going to be ready this week, but it looks like it's getting close to moving. So this here is what's called a falling wedge, right? So you're getting a compressed price action, which is in a falling motion. You also have this falling 50 simple moving average that came right through that 200. And so what I'm thinking, I would love to see this base. Now, right now, it looks like it might be setting up for an inverse head and shoulders, right? There's your left shoulder. There's your head. Maybe we get a stunted right shoulder here. And then I would watch for a break above maybe 316. If we get a break above 316, then I think we could take this to the upside, 323, potentially up to 342. And I think that's where the trade may start to falter. So there's definitely a trade here. It looks pretty good. I just want to see another couple of days of bullish price action on HD before we take a trade. Next up is MP. So I had an initial trigger on the 21st of 51.30. And I put this on my weekly watch list because we came up to our first target, and look at these 5 days that we failed at that target. And so when you get multiple days in a row failing at a price target, you generally get a reversal and a retest of the prior target or the breakout level, depending on which one. And so you could see yesterday we failed at 51.31, and then today we came right back through it. So in this one, I would have been in. I would have taken some profit here, but at this point, I'm moving stops to break even, and you're stopping out of this trade yesterday. So, generally you can, if you fail that trigger and it comes back through, you generally can take the trade again. You just got to be wary of the level it failed at to the upside. Always be very wary of that, because you'll probably get a double top failure. Not always, but you sometimes will. And so better to take a quicker trade that second time around rather than the first time around. Next up is Oxy, OXY. This is a trade I put out a while ago. I guess it's not on here, but in any event, it looked like it was setting up again, and it's still setting up. You could see right here, we've got a wedge forming, right? So there's your top, there's your bottom, price is compressing. And this makes a lot of sense, because when you get a big move like this, price tends to need to compress. It needs to consolidate, and that's exactly what's happening. But if we get a daily close over 61.09, then this looks pretty good. You might get another 10 points to the upside, because look at the squeeze that's setting up here, right? It's setting up, it's getting ready for a move. Some of the other things that I look at, look at RSI, backtest of 50, bounce. Maybe it needs to backtest 50 one more time and then bounce. And so that's generally what I look for. It's not like a one indicator fits all. I'm looking for multiple things on a chart to see if we're going to move. So here's pump, PUMP. Missed the initial move on this inverse head and shoulders breakout. Look at this beautiful breakout and back test, right? Perfect back test on the trend line. And look at the series of higher highs, higher lows, higher high, higher low, higher high, higher low. Now we're watching for that higher high. So initial trigger was through 1401. We got that on, we got that on Friday, but I mentioned on the video, if we hold on Monday, 1410, safe to take the trade. We did hold 1410. Now we're moving up to our first target of 1608. Watch the, we came initially to that 1608, a few weeks ago. Watch the break through that level. We might test it a couple of days before breaking through. If we test it for more than a few days and it doesn't break, then watch for a back test on 1401. But the squeeze is setting up. RSI is holding 50. It looks pretty good to a move, to have a move to the upside. Okay, next up is RES. And this is another oil and gas name. Y'all have noticed I've put out a lot of oil and gas names. It's just what the market is doing right now. Oil and gas is moving. A lot of it has to do with the war that's happening in the Ukraine, and energy costs, gas prices are going up. Just oil in general is going up. So another one, watching for break over 1185. We got the inside day yesterday. We got the breakout today. This looks pretty good. I would probably put stops around 11.25, maybe $11, maybe a little under $11. And targets to the upside is going to be 1405 at this point. So it's looking pretty good with that breakout today. Next up is SUPN. No trade alert yet on this, because I was waiting to see on Monday what it did. It actually came down. We're back testing the 50. So this one thing I would look at here, it's making a really nice trend here, an ascending trend, ascending triangle. So, rather than waiting for the breakout, here, watch to see if we back test this trend line. Sometimes it undercuts the trend line like you saw here. So if we back test or undercut that trend line, we could take a trade here. You just got to watch when it comes back up here, right? So if you take the trade down here and it comes back up here, maybe consolidates a little bit and then breaks out again, you could add to your position here. If you come back and you back test and then bounce, you could add more to your position here. Or from that prior high, you could add to your position here. There's so many ways. There's so many ways to take a trade. You have to determine for yourself what you feel most comfortable with. And Rita, you're absolutely right. There's a lot of names that you're not familiar with. Honestly, I'm not familiar with a lot of these names either. But if as traders, we sit around and we wait for all the names that we're familiar with, we're basically not trading. And I think it's, for you and for anybody that's listening, we had a really great run with tech. And I'm not saying that tech is done, but tech is done for now. And the question you have to ask yourself is, as a trader, do you want to sit on the sidelines and wait for tech to move? Or do you want to look for where the relative strength in the market is? And that's really what I've been doing. And, me 2 years ago, I was, all tech gung ho. But, now I'm realizing that, in the last year and a half, there's been a lot of opportunities outside of tech. We just have to scan and find that relative strength in the market. And yeah, so some of the names that I'm putting out, you're not going to know who they are. But, the way I look at it too is I'm also not investing in these names. I'm trading them. And so sometimes it's better to just cover the ticker, right? You don't care what the name is. You just care what the setup is, what the setup looks like. And if you apply proper risk management and you look for the trades are going to give you more than a 3-to-1 risk to reward ratio, then you shouldn't feel, uncomfortable taking a trade. If you want to do your own, due diligence in terms of looking at what the company is and what they do, I think that's important. I think you should. But for me as a trader, I try and remove my bias and look at a chart objectively. And honestly, part of my process when I'm looking at names is I'll scan and I won't look at the ticker. I'll just look at the chart, right? And I'm going to do this really quick, but I'll do something like this, where let me get my mouse back, where I'll go like this, right? And I'm not looking, I'm just going down. Oh, that looks pretty good. That's falling. That looks like it's breaking out. That looks pretty good, pretty good. Pretty good. A lot is going to be pretty good because this is my trade list. But, I'm just going quickly through them, just, because I've trained my eye to find what works for me, this type of setups that work for me. And then only after I say, oh, that looks pretty good, then I'll look, oh, look, that's Walmart, right? I mean, that's kind of my process. That's how I look at names. I'm trying not to get so focused on that I want to trade Tesla or I want to trade Apple, because yeah, they're great names to trade, but you're gonna have to be really patient and wait for that opportunity before they break out and really start to move. So hopefully that makes sense. All right, so Raj is asking if we can if I can give a brief on what we should follow on all these swings. Okay, great example. All right, so these 10 that I'm going over, here's the last one, Talo, right? This one I didn't put a trade idea out yet, but it's looking pretty close. I think a hold over 1873, it looks pretty good. But let's go back. Let me go now to my March, April trades. Let's look at Costco. Okay, so I'm going to drop a line where, let's see, 316. So let's find where the trade alert went out. So the trade alert went out right there. Okay, so what are we watching for? So I'm generally going to put a note right here, right? It's always going to be, the first line is going to be the date the trade alert is. The second line is going to be your entry. 99% of the time, well, not 90% of the time, I'm going to say, wait for a daily close over XYZ. And what does that mean? So that means that on the day, when the day is about to end, the price has to be above the trigger level. That's it. Now, that's the conservative way to take the trade. The second way to take the trade is you look at, let me make sure this is on all time frames. It is. I'm going to go down to a 30-minute time frame on Costco. I'm going to go back to the trigger day. So let me find the candle open on the 16th. Here we go. So, or was that the 16th or was it the 17th? No, it was the 17th. Apologies. Oh, wait, let me, 1 second. It was the 16th. Oh, okay. I see what it is. I put the trade alert out on the 16th. It didn't trigger until the 17th. That's what it was. So the trigger was 550, right? Let me put the trigger on. Okay, make that a little bigger so we can see it. That's our trigger right there. Okay, so you can see market opens here. We come up to our trigger. We fail initially. We pull back. Okay. We come back, we consolidate. This is 11:30 Eastern, 12, 12:30, 1 o'clock, we break out. 1:30, we continue. 2 o'clock, we pull back. 2:30, inside 30-minute. 3 o'clock, breaks the inside up to the upside. And then our last half-hour candle, we're clearly over $550. So for me, I'm taking the trade right here on this candle and I'm waiting till the end of the day. And at the end of the day, if I close over 550, I'm in the trade. If we close under 550, I take whatever that small loss is. I don't mind to take a 0.5% or a 1% loss. I don't care, because I might take, a 1% loss 2 or 3 times. And that 4th time, I'm going to get a 20% winner. And so, it makes up for those small losses that you take, but you have to have the discipline to follow the trigger. I don't put arbitrary numbers on these triggers. The trigger numbers are there for a reason. And we'll look at some other numbers. Now, look, you had a nice continuation up to 566. You had a 60-point move built in, right? Comes back, back tests. What does it hit? That 50 simple moving average. Comes back up, hits the 50. But look back here. We back test the trigger twice, 2 days. Bounce, comes back, back test the trigger again. Bounce. And now look at the move you get after we back tested that trigger. So even if you miss the initial entry and it's way above, don't chase. Wait for it to come back. If it doesn't come back, you missed the trade. It's okay. There's other trades that are going to be out there. The important thing is to have the discipline to follow the plan. Now, again, this is my plan. I would never say follow my plan exactly. I would always expect you all to do your own due diligence, to chart this out on your own, and to verify that I'm seeing what I'm seeing. I'm not perfect. Yeah, I do make mistakes. But, you know, the point of this is I'm really looking at these charts objectively, and I'm trying to find what is the best 1 to 2 trade ideas every day. Sometimes it's the setup. Sometimes it's a setup plus news. Sometimes it's a setup plus news plus options flow, you know, dark pool data, sentiment, upgrades. You know, there's always something going on in the morning. And generally part of my process is I'm looking, I'm scanning. Are there any news events? Is earnings a couple of weeks out? You know, we're coming into earnings season now. Earnings start, I think banks start to report on I think tomorrow, if I'm not mistaken. So, you know, you always have to, you know, do your own due diligence, you know, double check, you know, the names that I'm putting out, that, you know, if they have earnings, if their sector has earnings, right? These things do affect trades. And, you know, the other thing I'll say about these triggers, right? Once you're in a trade, you have to exercise, you know, proper risk management. You have to put a stop loss in, you know, and again, everybody's stop loss is going to be different. I use ATR, other people use trailing stops. You know, some people, you know, use trend line or support and resistance lines. You know, there's no right or wrong way. There's only a right or wrong for you. I would never say trade exactly the way I trade, because I have a very particular trading style. I have a very particular trading psychology, and it may not align with what you're doing. Is that? Oh, let me, somebody's unmuted there. 1 second. So yeah, so that's, those were the 10 ideas that I put out this week. And that, and, you know, this Costco is just an example of how, you know, I would take those trades. So I'm going to jump really quickly into chart requests. If anybody has any chart requests, I know I've seen some questions come in. So let me look through the questions real quick before we do go into that. So Arnold's asking, what does it mean when TTM switches from green to red? Great question, Arnold. Let's take a closer look at that. So I'm going to just shut off RSI for now, and we'll keep the Costco example up. So the red dots here mean the squeeze is setting up. Now, you maybe weren't on earlier, but I was talking about the squeeze and the fundamentals of the squeeze. The squeeze basically means the Bollinger Bands, which are in blue, are inside the Keltner channels, which are in green. That's what you're seeing right here. And that's why you're seeing the squeeze setting up. When the squeeze fires, you get an expansion in the Bollinger Bands. Okay, so you see the expansion right here. The Bollinger Bands are expanding outside of the Keltner channels. That's why the squeeze is firing. And look at what's happening with price. You're getting a nice push higher. The squeeze also works the same to the downside. You know, you can get squeezes firing to the downside. I don't see really one here on Costco, but I could certainly look at another chart and show you squeezes firing to the downside. But the fundamentals are the same. Squeezes can fire to the upside, to the up and the downside. And they also will happen on multiple time frames. And so that's really the fundamentals of the TTM squeeze. And it's one of my favorite indicators to use. I would never take a trade solely based on the TTM squeeze. But if I see a chart that has a really beautiful setup and it has a squeeze setting up as well, I'm taking that trade all day, every day. Right. So next question, gold and commodities are moving instead of tech in this environment. Absolutely. Not even just gold, Hyan, but other metals, copper, lithium, aluminum. I've put out trade ideas, LAC, right? Lithium America Core. We had a beautiful break over 29. We came up to our first target. It failed. And now we're back testing the 50. Copper, FCX. I think, multiple trade ideas. I think the first trade idea went out here. The second trade idea went over, I think, 41.50 right here. And then the next one came out over $46 right here. So, there's three. AA was another one that I've put out. This was from February, so it's not on the current list, but Alcoa. Initial trade idea went out at $62.58. We're at $87.38. So I'm following the rotation of money. I'm following where the money is flowing in the market. Look at all these back tests of 50 on RSI and all these bounces higher. I mean, that's why it's important. You have to follow the flow. Get out of your comfort zone. If you're only used to trading tech, trust me, tech will come back. But if you want to trade, you want to continue to trade, there's opportunities every single day and every single week. But yeah, gold, commodities, metals, gold, I would say oil and gas, it might be a little extended, but still, it's still going, right? You look at XLE, right? The energy ETF. I mean, it's just continual. We had a cup and handle, right? Cup, handle, breakout, hit our measured move, flag, breakout, starting to, set up in another cup and handle, like a little mini cup and handle right here. So, if energy can get over, if XLE can get over 79.75, give or take, energy is going to continue to move to the upside. So, that's, ExxonMobil, Chevron, Conoco, and these are your traditional oil names, but then you have like, oil transportation, you have oil refineries, you have gas companies. So AR is another one that killed the trade, absolutely murdered it. First entry over 21.70, second entry over 26.17. We're at $35. Antero Resources, I believe, is natural gas, if I'm not mistaken. I don't know. I'm just following the money. I'm following, where the relative strength is. So Adebayo is asking, I would love to see how you analyze charts in relation to volume profile. Yeah, great question. So here's let me properly anchor volume here. So what I do with the volume profile is I anchor it to a major low, and then I watch for a volume shelf to set up, right? And so look at the volume. Forget that data that's happened, right? I'm looking here. You see all this consolidation. You see this massive volume shelf. This is what I call a volume shelf launch pad. When this breaks out, price tends to launch. So look what happened. Price broke out and it's been moving higher and higher with little areas of consolidation, right? Builds a little mini shelf there. It's building a little mini shelf here. But look what happened right here. We had a little shelf building right here and we broke out. And now we're continuing to the upside. So that's really the essence of the volume shelf. I look at it more from a supply and demand zone. Let me see if I can find something that's more interesting here. So here's Bros. This is a coffee company. Let me anchor to the recent high. Now here we're building a demand zone right here, but look at the volume gap from this fall of price, right? So there's a supply zone right there, right? So look at the supply zone, right? And right now we're in the demand zone. So what happens is once we get through this supply down here and it gets over the demand right here, it's going to fly right to this zone. And so there's probably a $2 to $3 move right there, right to that supply zone. And then once it hits supply, basically it's a psychological game, right? Everybody that bought here, that's holding down here, is bag holding. So the moment they get back to break even, most of them are going to sell into you because they just want to get their money back. And so that's what happens. You get a stock that moves up into the supply zone, and then it usually consolidates because it's trying to absorb all the supply from everybody who bought here and everybody that bought here. So eventually you eat up all that supply, and then it moves higher and it moves up to the next zone. So that's really kind of the psychology of supply and demand zones. Right now, in this case, we're just building a demand zone down here. That's where the demand for the stock is because it's consolidating. But eventually it's going to break above that demand zone and find new sellers up here. So hopefully that answers your question. Okay. Costco, so good, especially when you compare it to a relative strength. Yeah, absolutely. And listen, Alvin, if you think about Costco from just a business standpoint, right? They sell bulk items at a discount. And so as commodity prices are going up, as inflation continues to rise, people are looking at the BJ's and the Costco's and the Walmarts of the world to save money on stuff that they're buying. So sure, Costco is going to continue to go up because people are going to continue to save money and value shop. So the Walmarts, the Costco's, the Targets, those are the names that you should be. The dollar stores, Dollar General. What's the other big dollar stores? Dollar General and I forget the other one. But think psychologically. Think about what is going on in people's minds. Everything's going up. Commodity prices are going up. So think about the families that are living the middle class to lower middle class. They still need to survive. They still need to buy things, right? And so they're going to value shop. And so when these companies report next, their reports are going to be very good, and the price should continue higher. So that's why it's important. Forget about tech for now. I think tech will come back, but I think for now it's still dead weight. There's still a lot of really broken charts. All right, Ram, let's take a look at TTD. So this one I've been watching for a while. I did put out, this is an old alert. Let me delete that. And let me redraw this. And so you could see right now here. So here's some here's some bullish divergence, right? So you RSI making a higher high. You have price making a lower high. You get this move off of that bullish divergence, but we're struggling at the 50 simple moving average, and we're struggling at the 200 simple moving average. If we properly anchor that, look at all the supply that it's got to go through. Once it gets over 83.46, then I think we got a shot to move higher. Until then, we need to clear these two moving averages. Looks like we're just setting up in a 2-dot squeeze here as well. So looking like it might want to set up for the next week or two. How do we track previous weeks by like LAC? So Raj, in the back end of the platform, you'll find all of the previous trade ideas. I try and send out trade idea updates every other day, but basically that's only going to be on maybe trades from the last month or so and things that are moving. So I might put out an alert on LAC just to watch the back test, right? Because we're back testing the trigger here, but we're also back testing that 50 simple moving average. So this might be a spot to take the trade again. We had earnings on 325, so earnings won't be for a little while, but RSI has cooled off. TTM squeeze has cooled off after firing here. So this thing might need to consolidate before making, another move higher. Raina, let's take a look at Arch. Really one of my best trades this year so far. So first trade entry was over 103, 103.62. It was off this beautiful cup and handle, made a beautiful move up. Now we're in a wedge. And although I didn't put a second trade idea out on this, I did mention last week, watch 145.67. We did get that break yesterday. Beautiful continuation today. We had the slingshot squeeze firing today. RSI broke out a few days ago. They're a supplier of coal, so they're in the energy sector. This is interesting, right? So, oil's getting, oil and gas, as commodities are strained right now due to supply, supply and high demand. But, coal, right? Coal's different. And so now that, Europe is dealing with not being able to or not really wanting to buy oil from Russia, and they still need energy, people are reconsidering coal. And even though it's a dirty fuel, I mean, geopolitical issues are dictating that now they need to look at other energy sources. So coal, nuclear. Let's talk about nuclear just for a second. I'll come right back to Arch. What is it? UAL? No. CCJ. This is a uranium play. URA is the global uranium ETF. Look at this move off of the downtrend, right? So this is why, again, you got to follow the relative strength. Let's go back to Arch. So yeah, so we had the measured move off of the handle. We came right into the top of that measured move. We came up a little higher, but that's where I would have expected some consolidation. We got the wedge. We got the breakout, the back test, the continuation, and now another continuation to the upside. So, if you're not in this trade already, you're definitely chasing. But if you caught that first entry, I mean, we're up what? Almost 60%, 56%, 57%. And that is in 2 months, right? I'm pretty happy with that. I think most people will be pretty happy with that. It's moving like a tech stock. It's the new tech, right? It's kind of the way I'm looking at it. It's the new tech until tech comes back. So, but Arch does look pretty good. Let's take a look at UPST. Really love this company. I mean, you have to just be honest with yourself. We started at $24. We went up to $403. Now we're consolidating, in a wedge. We broke the wedge to the downside. I think where we have to be careful is under $75. If we break below that low, then I think, possible to see a move down to the $45 to $50 range. Sorry to say. It's still post IPO, even though it's a year and a half out. It's still relatively young, and you just got to be patient with these names. I'm not ready to say, excuse me, time to buy UPST. Not yet. Moen, also UPST. ABV. ABV has been another great one. Initial trade alert went out on 2-2 for 138. Look at the consolidation here off the cup and handle breakout. Didn't look back, right? But now it's starting. You got a big move up. Now you got 3 days pullback, right? So if you're in this trade, you need to start tightening up your stop loss. Don't give away all of your profits. It looks pretty good though, but it's back testing that 50 RSI and it's coming back down. So might be done for a little bit. BAC did mention that earnings are coming up. So let's see, earnings are going to be on April 18th. So this is a no trade right now. Don't trade this. If you're in, be careful because we're coming back down to the lows at 38.15. If it gaps below that, I think it's in trouble. It looks relatively weak right now. So I would just be careful with BAC right now. Excuse me. Yeah, green, Reina, means fired if it's in front of red candles or red dots. So, the rule with the TTM squeeze is when you have a series of red dots and then you get a green dot, that's firing. And depending on the time frame, really, regardless of which time frame you're on, you're going to get 6 to 8 candles of movement generally off of the squeeze firing. So from the moment you get that green dot, count out 6 to 8 dots later, and that's generally where the trade stops. Or the squeeze stops. Sometimes it extends more, but that's generally where it stops. Zoom user, you've got like 5 names there. I'm going to pick one. Let's look at CPE because I went over bros just before. This one is an active trade alert. So I put out a trade alert on 3/31 for a daily close over 64.50. You could see I have this counted out as a cup and handle, but it's really struggled at 64.50. So right now it still looks like it's consolidating, but also the squeeze just has been unable to fire and momentum starting to come down. It's been holding in a bullish range. It just needs to break out. So I think once it breaks out, I think it goes. There's a saying that we use, the longer the base, the higher the space. So this has been building out a base for about 6 months now. So looks pretty good. AMD showed some signs of life. Just actually semiconductors in general showed a little bit sign of life. I did have an initial trade alert on 317 over 117.66. We did get the breakout. We got 2-day back test. We had a hammer, and then we had a bearish engulfing candle. Stop out of the trade right here. Gap down the next day, and now it's been nothing but down. So it's not looking interesting to me right now. I think back over $100, it looks more interesting. I'm waiting till next week on AMD personally. So Moen's asking, what are the stocks that you mentioned that we can buy tonight or tomorrow if we miss the targets? Well, I don't think there was anything specifically that I mentioned. What I would say is, like, if you get a back test, let's say you get a breakout, maybe on pump, right? You get that breakout. If we back test the trigger at 1401, that might be an area that only, you don't buy the pullback, you buy the bounce off the pullback. So if you get that pullback, don't buy it there. Wait for it to start to bounce over the trigger, and then you put your stop loss underneath. That's kind of the way I look at buying, a missed trigger. Favorite cybersecurity. So I put out CYBR. I put out 2 trade alerts on this. First one was on 322 off of a symmetrical wedge right here, breakout. We got the initial entry, I think, was 322 was right here. It kind of consolidated for a little bit and moved up, back tested, came back down, and then the second trade alert went out over 170.99. And we got that on Monday. Tuesday back tested. Today we put an inside day in, and we're starting to go back into a squeeze, but holding a bullish range. So yeah, CYBR looks pretty good. I think, what's the other one? CrowdStrike. This one also looks good. Again, 2 trade alerts. First one on 310 over 193. Beautiful move right there. And then the second one was over 206.91. That's right here. You can see we back tested that trigger right here last week. What was that, on Wednesday? And then yesterday, I almost put out another trade alert on this, but then I was like, I already put 2 out. I'm going to hold off on the third. But the third trade alert basically was going to be on a break and hold over the 200 simple moving average, is exactly what we got today. One of the reasons why, well, besides what I just mentioned, one of the other reasons why I didn't put that trade alert out is we got the 618 right here at 242.20. Look at where we stopped today, 242.20. What was the high of the day? 242. Missed it by 20 cents. So yeah, that's why I didn't, it still looks good. So if you're in any of these 2, you're still in good shape. But those are the 2 I'm watching right now. How do I determine anchor points for volume? Very simple. Swing high, swing low. So here's your anchor point for the swing high, right there. There's your volume shelves. And then here's the anchor for your swing low, right here. Here's your volume shelves. So very simple. Yeah, definitely crowd. Dollar Tree. Yes, that's what I said. Dollar General, Dollar Tree. So let's look at DLTR. I put a trade alert out on that on 222. Let's take a look at this trade, because this is another really good trade right here. Oh, right here. That's where the trade alert went out. What was I seeing? Wave 1 up, wave 2 down, wave 3 up, wave 4 triangle, wave 5. Where was my target? Right here. Where are we now? Right here. So this basically played out exactly as I anticipated. I saw this wave 3 gap up. That told me this is likely wave 3. You saw a consolidating triangle or consolidating wedge. That's generally wave 4. My entry was 144. You got the entry false. You got an entry here, inside day breakdown, right? You stop out initially. You take the second entry here. You get a push higher, gaps up, and then closes down, but still closes above. Next day, back test the trigger. These are all the telltale signs I look for. And what happens after the back test of the trigger? It just goes. And now we're in our target zone of 164 to 174, and it does not look like it wants to stop. We just came into overbought conditions, but guess what, ladies and gentlemen? Just because it's overbought doesn't mean it's done. Why? Look back here. Overbought conditions, dips back down, back test, overbought conditions. Look at the rest of the move here. Sometimes overbought conditions means it's just getting to go. So, just keep that in mind. So yeah, on this one, another 1 month trade over 144, and we got 20%. So it's another good trade. But again, dollar trade, right? People are going to look to save money. All right, DNN. Don't know this one. Looks like it's really just consolidating in a range. Look at that. So here you go. You got a low, you got a higher low, you have a false breakout right here. And then it fails, right? And now we're coming back up to this previous high back here. So looks like, you could look at it as like a cup and handle, but the only thing is it's under $5. So to me, this is a penny stock, and they generally don't act properly when it comes to technical analysis. So Raj is like, if any newcomer wants to follow all of your trade ideas, weekend review is enough. I think the weekend review is very good. I generally stick to 10 to 12 names. Sometimes I recycle previous names that just haven't triggered. But yeah, I mean, that's generally really good. The thing is, the market changes every day. So every day I'm scanning, I'm finding new ideas. So let's say I come up with 10 or 12 trade ideas over the weekend. I might come up with another 5 to 7 trade ideas throughout the week. And so if you're not paying attention to my morning emails, and just so for anybody who's new, I do send out an email every morning, sometime between 7:30 and 8 a.m. Eastern Standard Time. Sometimes I'm a little later, and it's only because like sometimes I'm waiting for news to come out, like yesterday, or was it yesterday with CPI or the day before with CPI? Thursdays are usually unemployment. So sometimes I'm a little later, because what happens is those events tend to move the market. And so I want to wait to see what moves with those announcements. But more often than not, 7:45, 8 o'clock a.m. Eastern Standard Time, that's when my alerts go out. It gives me enough time to observe the market, scan, look at volume, search for news, and find what's going to move that day. And you'll find, I mean, for those of you who have been with me for a while, you know that more often than not, I would say 70% of the time when I put a trade idea out, it generally goes that day or the next day. Now, I'm not saying that, I have a crystal ball, because sometimes they go and they fail, right? It happens. I have no control over what the stock is going to do, but I've been doing this long enough that I know the telltale signs of what to watch for a stock that's going to move. And so even though these ideas that I put out are swing trade ideas, you could actually use them as day trade ideas too, because the triggers are the triggers. Take a day trade off the trigger, whether you're using shares or options. I've had a couple of people ask me, why don't I put out option strikes? And the simple answer is, trading options is risky, number one, and trading options is difficult, and, it's not that I don't want to, I'd be happy to, but the problem is if I put out, a particular strike and a particular expiration, it's because that's what I would do, but it's not necessarily what you should do. Everybody trades options differently. Some people sell premium, some people buy naked calls, some people do covered calls. I mean, there's a lot of variables. So what I would always say when I'm looking to buy options, the two things that I keep in mind. Number one, I never buy further out than the next target or the next resistance level. That's really, really important. And number two, I buy enough time. I don't generally, if I'm day trading, that's one thing. I might do weeklies or 1 week out. But if I'm swing trading, I'm not buying anything closer than the next monthly expiration, unless the next monthly expiration is a week or two away. And then in that case, I'll go another month out. But generally speaking, if there's not enough liquidity in the name that I'm watching, it's much better to just go with shares. I don't like to play names that have wide spreads or that have low volume or low liquidity. You generally will get trapped in those names, and theta will just eat those contracts away. So that's generally why I don't do or don't offer options contracts, but I do trade options. Do I think commodities and materials and energy are at late stage, Raj? I think that's a really difficult question to answer, only because of what's happening in the geopolitical atmosphere. The longer the war in Ukraine goes on, as long as oil and gas can continue to rise, the Fed has signaled that they want to raise interest rates faster, and they will continue to raise interest rates so long as inflation is high. And so if inflation keeps rising, then yeah, I think commodities, materials, and energy are going to continue to go, and they're not late stage. But if the Fed continues to raise rates and then inflation starts to fall, then game back on for tech, right? Then yeah, energy, commodities, materials, they'll start to fall by the wayside, and then we could refocus on tech. But until this war in Ukraine ends, I don't see that happening. CTVA. Yeah, this is another one. I guess for whatever reason, I didn't put a trade alert out on this, but obviously, I mean, look, cup and handle, breakout, back test, broke through the first trigger, hit the second trigger, or excuse me, first target, hit the second target. It's probably past the third target. Yep. And now we're, continuing higher. Can't catch them all, right? To be quite honest, I could probably put out 3 or 4 trade ideas every day. But what happens is you do that every day for a month, and now you've got like 100 trade ideas. It would drive me crazy, and honestly, it would drive you all crazy. So I try and pare my names down as best as I can across multiple markets. I don't want to put all oil and gas names out. I want to get a little bit of diversity in the names, because it makes no sense to buy, 3 different oil names, because then if oil goes down, all 3 of those names are going to go down as well, right? Okay, let's go to the next question. How do I determine the direction of the TTM squeeze fire? Do you use wave A, B, and C to help in the direction? So great question. Generally, I follow the direction of the momentum on the squeeze. And so, I'll make this a little bigger so we can see, so here you see the momentum is going up, but then it comes back down, and then it starts to come back up, and the squeeze fires, and then the move goes higher. Let me see if I could find one where the squeeze here. So here you have a squeeze, it comes up, it fires up, but then squeeze starts to dissipate, goes back into a squeeze, and then it fires down, and look at the move down. So you're generally going to follow the path of momentum, but it can fake you out too. So I'd always recommend, if you want to use the TTM squeeze, make sure you're using it on multiple timeframes, and make sure you have timeframe continuity, multiple timeframe continuity, meaning it's going in the same direction on multiple timeframes. It's setting up in the same direction on multiple timeframes. If you get cross signals, then it's not to say that it won't work, but it's less likely to go in the direction you think it's going to go in. So I think that's the most important thing. In regards to Elliott wave, I think that's what you're talking about, wave ABC. Yeah, I definitely use Elliott wave. And it's just another edge. It's just another tool in my tool belt. And so I use that as an edge to determine not necessarily a trade, but to determine where in a trade I am. Am I in a wave 1? Am I in a wave 3? And am I in a wave 4 pullback? If you can determine which wave you're in, it gives you a better sense of where you should be entering the trade. So that's what I use Elliott wave for. RH, I haven't looked at restoration hardware in a while. Ooh, well, that's why. Yeah, this doesn't look good. But I mean, if you look at the move that it made higher, right off the swing low down here to the swing high, we're sitting right on top of that 618 retrace. Ladies and gentlemen, this was not planned, but this is a good area to look at. Let me move my volume bar back. Sometimes it gets tricky to grab it when it's like that. There we go. All right, so we've got a nice volume shelf that we're sitting in right here. So that's pretty good. Let's go up to a weekly chart. let me get this to the previous swing low. Yeah, it's always good to go up to the higher time frames. Yeah, so we're sitting on a nice volume shelf here, and we're sitting on the 200 on the weekly. So this is an interesting area. I would keep an eye on RH here. We've had 2 weeks up. What I would say, wait for maybe 360, right? So why do I say wait for 360? Because you had to move down here. That's where it bounced. You had to move back into 360, it bounced again. Then it failed, came back through, wicked through, wicked in, watch 360. I think over 360, RH looks pretty decent. SE. Yeah, SE has been brutal. I mean, this is why, I've been saying like tech stocks have just been, or growth stocks have just been absolutely decimated. This is still in a perpetual downtrend. It can't even get over its 50 simple moving average. To me, it's just dead to me for now. Until it starts to get back over that 50, maybe over 128, possibly over 133, then I think we can take some trades to the upside. But until then, you just got to let it fall. This is, although I think it's going to be a great company in the long run, you just don't know how long it's going to dip and how far it's going to come down. And just blindly buying dips, the dips can get dippier and dippier and dippier. Yeah, me too, Josh. I finished another module a few days ago. I'm hoping the finish line is within reach. So I do plan to spend some more hours this weekend working on it. I'm working on the extension portion right now. I think once the retracement and the intro and everything else like that is done, once I finish the retracement, I'm going to launch it. And then I still have 2 other modules that I'm going to build onto it. So I'll launch it, not completed, but still good enough that it's well worth it. And then the other modules will just be added on as part of the package. Yeah, Arnold, let's see if there's any other chart requests. Trading becomes so easy the way you explain it. Thank you. I try and keep things as simple as possible. Even my charts, I try and uncomplicate them. I don't have a lot of lines and levels and stuff like that. So, and listen, trading is not easy, but it can be simplified. And really, that's my job. My job is to simplify trading as best as I can. DNN, okay, so DNN is a uranium play. I didn't know that. Okay, so let's do fibs on this. I'm going to just erase this for now. And I'll turn off that. Let's turn everything off, and let's just work on fibs. All right. So first thing I'm going to look at is this swing right here. So you're going to have a swing high, and then you're going to have a swing low. And what I'm going to do is using my retracement, because we've already made, oh, so here's another thing. This is really something to watch for. 3 wave moves, A, B, C. 3 wave moves, A, B, C. Right? 3 wave moves, A, B, maybe C. Right? Where would C end usually? Right? Probably right there. So just something to observe how stocks move, generally in 3 wave patterns. So that's number 1. So let's look now at Fibonacci. So I'm going to take my retracement. I'm going to start my swing high. I'm going to drag down to my swing low right here. I'm just going to extend it out. And what I'm watching for to the upside is the 618. And look at all these rejections off the 618 right here. So you finally got a breakout here. It back tested the 618 here, and it's starting to bounce. Now, the one thing you have to keep in mind with Fibonacci, it's never an exact number. It's always going to be a zone. And honestly, even though this is like a penny stock, it's a $2 stock, it's still respecting these fib levels. Here's another way I would use Fibonacci. Let's say this starts to move up and it starts to pull back. How can I find the pullback level? So again, I take my swing low, I go up to my swing high, and I would watch for a 618 retracement. And look, you got it right there, right between the 50 and 618. There's your 618 retracement. You get that bounce higher. So that's two ways that you can use Fibonacci. You could use Fibonacci to buy a pullback, which I just showed you in the second example, or you could use Fibonacci to watch for resistance after a retraced move back up. All right. That's like the short version. Raina keeps seeing tech, TECK. Yeah, I guess I did chart this at one point. So let's take a quick look at the weekly. All right, so here. So let's say you see a chart like this, right? And you want to know, where is this going? So what I would do is I would use my fib extension for my previous swing high to my swing low, which is right there. I'll extend it out. And that's going to be my next target, right? We've already hit our first target. My next target will be 46.34. But, you know, this seems like it's an old stock. So let's go up to a monthly, right? So look, there's an even bigger level right here, bigger swing. So I would go back to my Fibonacci retracement because we haven't retraced higher than this level here. And I would look at it from that perspective and look at that. We just broke the 618 here. Look at the resistance here on the 382, the 382, the 382, right? So now we're over that 618. So this is also going to be another module. How do you build Fibonacci clusters, and what do clusters look like? So I'm going to take multiple swing levels, right? You're going to start to see at some point, these levels are going to start to align. I might do a 3-point symmetry cluster here, right? So I do 1 and 2. So look at that right there. It's a 100% symmetry move. Look at the rejections there. Look at the rejections there. Symmetry is going to be another module that I'm going to build on to the Fibonacci class. So a lot of these Fibonacci tools, they work really, really well, but they're not signals into themselves. You know, you have to use them in conjunction with other things like TTM squeeze, like RSI, like moving averages, or anchored VWAP. You know, there's so many things that I use. Those are basically 4 or 5 of the things that I use on a daily basis. But that works for me. It may not work for you. You have to kind of play around. Nice job on LAC, Raj. Yeah, I think if it holds over the trigger, if it holds over 29.50, I think, yeah, it's still a good trade. You just have to be careful now going back to the upside. You know, I would look at, so here, let's do this. Actually, let's even look where it bounced, right? So you're going to take a Fibonacci retracement from the swing low to the swing high. We dipped below that 618, but now we're coming back up. Now let's say the bottom is in. Now what I would do is look at the retracement from that high, and let's say that's the bottom, that low. You got to watch these levels on the way up, right? Look at the rejection right there. Look at the rejection right here. So this might be the bottom right now. We don't know yet. We got to wait for this to retrace a little bit, but looks pretty good though. Hey, Walter, good to see you, my friend. Good to see you. Oh, so Raina wants to bring out the fire. She wants to bring out the go no go. I did actually want to talk about that. So I've been playing around with this new indicator on TrendSpider called Go No Go, and let me show it to you here. Actually, let me not do that. Let me switch my workplaces. I know it's in use in the other screen. Hold on, let me shut that screen down. Oh, come on. Bear with me 1 second. Oh, no, it's not that one. There it is. Okay, so this is Go No Go. And Go No Go basically is a color-based tool that's for trend direction. So dark purple is very bearish, pink is bearish, orange is neutral, Teal is bullish and blue is very bullish. And so I've been playing, I'm not ready to kind of use this like publicly. I've been putting charts out just to play around, just to show that I'm using it, but it's interesting. Let's take a look at, maybe let's take a look at a trade. CEIX, no. Maybe we'll look at Arch. Yeah, so look in the cup, it starts to change. Like it was moving higher, then it went to negative, and then it came back positive. It's been, teal green the whole way. There was something that showed the trigger, like the neutral colors. Let me see. CCJ. No, but in any event, what I'm doing is I'm looking to see how I could add this to my strategy. Generally, these orange from a downtrend or from an uptrend will signal a reversal. And so you could see the downtrend here, then we get a pop higher. You get these orange neutral. Basically, they call them go fish. You shouldn't be trading here. Just go fishing. But once we turn, look at the move that we get higher. So again, it's not one of those things that you're going to want to use into itself, but it can be used in conjunction and in confluence with other indicators. So Abadai is saying, I have trouble riding trends. When I see trends like this, I do feel like the move is exhausted and wouldn't want to follow in. Then it just moves on to the next fib. Is there any advice to be able to judge trend continuation? Absolutely. So let me go back to. So let's say Arch, right? Arch is one that's been going and it has had this big pullback. And let's say you think that it was exhausted here. What I like to use is an ATR trailing stop. That's the ATR trailing stop here. And I use a signal of 3. So that's basically 3 ATRs. So let's say you get into the trade right here, right? And what ATR 3 allows you to do is stay in the trade, right? So you get that move up, you're extended, but now you're consolidating. At no point does it close under ATR. And now that we're breaking out, ATR is moving up again. So this is the one thing that I think is so simple, yet so effective in staying in a trade. Let's look at another, like Costco. Same thing, right? You're in at 550, you're riding the trend, you're still in. Keep in mind though, this, if you use this as a stop loss, it's a very wide stop loss. So I think what you have to do is you have to get comfortable. If you want to stay in a trade long or longer, you have to get comfortable with having wider stops. I think in the end, that's what it boils down to. LAC, you see LAC, you get stopped out here. Now it's flipped, right? ATR is above, so that's a no-go. Here's NUE, entry was at 128 right here. You don't come back under that ATR. So I think that's the easy answer. I think the harder answer is you get more comfortable the longer you trade and the more comfortable and confident you are in your trading style. It comes with time. But this ATR tool really, the ATR trailing stop really works well. So Raj is saying, I like the idea of ETFs on our mailing list. Those are all actionable swings. Do you have any minimum volume filter like 300K? I don't have a minimum volume filter, but yeah, I think ETFs definitely are actionable. I generally don't put out an ETF trade idea. It's just not necessarily my style of trading. But I absolutely think, when it comes to, I think my newsletter that goes out on Sunday, I always highlight the top 3 sectors that I'm watching for the next week. But yeah, I think there's absolutely opportunity to play the sector versus an individual name. It's going to limit you in terms of the upside, but it's also going to protect you towards the downside. So I think it's definitely a safer way to play extended names, right? I don't know if that's why you're asking, but I think, if you feel like a trend is extended, playing an ETF definitely gives you downside risk management. All right, I'm not going to be doing any more any more I'll do one more, actually. I'll do one more because I want to take a look at Tesla myself. So yeah, look, with Tesla, it flipped over ATR. So we're not looking at Tesla to the upside quite yet. And although I did have my wave 3 up here, we did not extend as far as I thought. So now likely this is our wave 4, with wave 5 possibly coming back maybe upwards of here. So Tesla still looks good. We had a nice bullish engulfing candle today. So I think that's positive. I want to see a continuation tomorrow. We don't get the continuation tomorrow, then I don't think Tesla's ready. But my conviction is to the upside. I do think this is a wave 1, 2, wave 3 higher, right? Why wave 3 higher? You have that gap up right there. And this is subwave 1, 2, 3, 4, 5 of 3, right? Then you usually get an ABC correction. I'd have to look at the lower time frames to see if this is an actual ABC. ABC could be very possible. So yeah, I think Tesla looks interesting here, but I'm not sold quite yet. I think back through, well, I got back through 1,000. I think back through 1062. I think that for me is a signal to go long again. Josh, welcome. Your first class. I appreciate you. I appreciate you having you here. Yeah, this is what you should expect from my classes. I'm always gonna try and pack as much information as possible, be as open and honest with you all as I can, because my job is to really help you all become better traders. And you just have to have patience. It takes time. You know, it took me a couple of years to really get comfortable charting and get comfortable trading. And for everybody, the journey is sometimes shorter, sometimes longer. But if you stick with it, you know, I think that's the most important thing. You know, if this is something you're passionate about, don't give up, because, you know, this could be something, you know, that you can do for the rest of your life. The market's not going anywhere. So yeah, how can we best use balloon raindrop candles? Great question, Raj. I don't use them as often as I probably should, but generally speaking, you want to watch for blue raindrop candles. Those generally signal reversals, as you can see here and here. But you also want to look at them from a volume perspective. So you see this candle here on Tesla. Most of the volume was here at the beginning of the day, at the bottom range of the candle. But at the second half of the day, it was all at the top. So to me, that's really bullish, right? That's telling me that there might be some conviction for a continuation tomorrow. So that's what I would look for. I also look for balloon raindrops. I don't really see any good balloon raindrops here, but balloon raindrops would be basically no volume at the bottom and all the volume at the top. I'm not really seeing any of those here, but that's how I basically would use raindrops. ATR, yeah, I would N2JYTJ. Yeah, ATR definitely is in trading view. You just have to find the right script. Make sure you're searching for ATR trailing stop, because there's ATR, which is average true range, and then there's the ATR trailing stop. You want the trailing stop. So Win10 is asking, what is the best indicator that shows if price is strong or weak when it comes to support and resistance? My problem is always the cut throughs. I don't know if there's an indicator. I think watching the tape, watching level 2, using anchored VWAP, I think is really good from a swing low and a swing high perspective. Also, I don't know if you're swing trading or day trading, the answer might be a little different depending on what your answer is. But, you know, if you're a swing trader, sometimes you have to ignore the intraday volatility. Those undercuts happen because the market makers flush a name to stop people out. They see this, they see the stop losses in the market, and so they want to flush them out before sending it higher. So a lot of the times, in my experience, those undercuts are actually a signal to go higher or to go the opposite direction, because they're usually stop hunter loss candles. So keep that in mind. My favorite screener, I screen for a number of things. I don't have a favorite, because my favorite is the combination of all of them. So I scan for inside days. I scan for TTM squeeze setups. I scan for volume. I scan for anchor VWAP pinches. There's a variety of things that I scan for. I usually start with the inside days and then work my way. I narrow down my list from an inside day perspective, and then I move on to my other scanners. And that's how I come up with the names. But honestly, truth be told, my favorite scanner are my own two eyes, because sometimes just if I have a list of 100 names, like I was saying before, I'll just do this. Well, let me take raindrops off because it slows it down. But I'm just going to do this. I'm going to go down names and I'm going to visually look at charts very, very quickly, just like this. And if I see something like that, I'll stop. Ooh, cup and handle. That looks interesting. I might put that on the list, right? And then I'll just keep, oh, that looks pretty good, right? A little flag action, maybe an ascending triangle. That looks kind of interesting. Maybe another cup and handle there, right? And so this is all I do. This is the best scanner. Once you train your eye to find the setups that you like, you don't really need a scanner. You just need a watch list, and you need to spend 20 minutes going through charts. Narrow it down, you build your top 10 list, and then you go through your top 10 list and you start charting it out. And you do that every day for 6 months. Number one, you're going to get really good at charting. And number two, you're going to start building a bigger watch list of names that you've touched. And then you start to understand the personalities of that stock. So it's really all about putting the time and effort in. Like anything else in life, the more time you put into this, the more you're going to get out of it. Yeah, stop loss hunter is a manipulation by the market makers. Absolutely. And Roger's saying rates are good for banks, but why are banks going down? It could just be selling off into earnings. Now, you could look at that one or two ways. Somebody knows something. Somebody always knows something, right? Or, it's just a function of the market and they want to discount before earnings pop. So it's so hard to say. But earnings generally kick us off, or always kick us off for earnings season. And as the banks go, generally so does the rest of earnings. So this is going to be a really telltale sign. If banks start to report pretty well, that is a really good sign that we might be ready to move higher. If banks don't report so well, then I think we need to be very careful. So before we go, stop my screen share there. And I just want to talk really quickly for those of you who are new and joining me. Again, I have my educational platform. It's $79 a quarter or $275 for the year. We do these talks every 2 weeks on Wednesdays. I send daily trade ideas out around 8 o'clock Eastern Standard. I also have about 18 to 20 hours of trading education on the platform, as well as my top 10 long-term conviction list. I give you access to all of my TrendSpider scans and my watch lists, all my trading rules and documents. I do the chart requests pretty much on demand, and the weekend video where I go over my top 10 or 12 charts. This is the best plan, honestly, because you get everything like that. You also get lifetime access to my Fibonacci course, and you get 4 hours of one-on-one coaching. So that's generally what most people go for. It's just the value is really good for that. So that's it. That's office hours. I really appreciate, first and foremost, all my members that came and attended. It's always fun to have you on. It's always good to do this live and in person with you so I can answer your questions and take your chart requests live. And then obviously much respect to everybody that's come here for the first time. I obviously wanted to invite you just to show you a little bit about who I am, what I do, and how I do it. I know sometimes people are trepidatious about buying a service like this without knowing the person and knowing what they're all about. I try and be as transparent as possible, certainly on Twitter. That's where most of you know me from. And this is what I do. So I do this for a living. I do this full time. So if you are interested, I mean, certainly I would love to have you on board. I'll drop a link real quick in the chat if you want to sign up. But yeah, again, I really appreciate your time. You know, I know being on a Zoom call for an hour and a half is a little long, but I try again to pack it with as much value and keep it, you know, kind of light and entertaining as well. So again, thank you so much for being with me. I really do appreciate it. Appreciate your time. Good luck in the markets. Friendly reminder again, the market is closed on Friday. So tomorrow is the last day of the week. Make sure, you know, keep your stop losses intact. If you're going to do lotto trades, only risk what you're willing to lose completely. And I think next week, going into the end of the month, I think we'll have much better trading opportunities. So have a great evening, everybody. I'll catch you in the markets tomorrow.